Meta stock, ticker symbol META. This stock is up 48% on the year-to-date chart, outperforming the SP500 big time. Meta beat on both the EPS and revenue with big numbers. For the upcoming earnings, all analysts expect another beat. And a lot of dividend investors are really excited about Meta paying a dividend. With a dividend yield of 0.1%, it ain't much, but it is a great start. And if we look at the past 5 years, we see that Meta had twice the return of the S&P 500. So, could this be the perfect time to buy Meta stock? Well, by the end of the video I will give you my 3 price targets, so make sure to stay tuned and see how I build up to these price targets. I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So what does Meta do? Meta is the world's largest online social network with nearly 4 billion monthly active users. And users engage with each in other different ways, exchanging messages and sharing news events, photos and videos. The firm's ecosystem consists mainly of the Facebook app, Instagram, Messenger, WhatsApp and many features surrounding these products. When we dive in the recent earnings, we see that the fourth quarter revenue was reported at 40 billion, up 25% year over year, which is an insane amount. On top of that, expenses decreased 8%. Operating margin went up from 20 to 41%, looking really good to me. EPS went up 203%. And to be honest, these earnings were insane. There are a few really important numbers for Meta to keep an eye on. First one is daily active people, or DAP, increasing 8% year over year, looking really good. Monthly active people increased 6%, also looking really good to me. One of the most shocking things besides these great results were the announced dividends, coming in at $0.5 per quarter. For the first quarter of 2024, Meta expects 34.5 to 37 billion in revenue. For the full year, it is expected to see 94 to 99 billion in revenue. They expect higher infrastructure related costs this year, which could put pressure on the margins. Second, they anticipate growth in payroll expenses. And finally, for Reality Labs, they expect operating losses to increase year over year. And now that we know a bit more about the company, it is time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analyses every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue by diving into the fundamentals. Meta is a 1.3 trillion market cap company. PE ratio is at 33, indicating you pay a premium for the stock. Later in this video I will show you my 3 price targets for Meta stock, so make sure to watch until the end. Revenue is at 134 billion and in this graph we see that revenue went up in the long run. We also see that revenue was slowing down for a few years, but as of lately it is increasing again. Margins are going up and down a bit, and after seeing the bottom late 2022, margins started to recover again. EPS is pretty much the same story as the margins and revenue, nothing really special to add here. Analysts expect that EPS will grow at pretty high numbers in the coming years. On average, you're looking at roughly 15% per year. For the revenue, analysts expect an average of 10% per year, and also that revenue will slow down a little bit over the years. Return on assets is sitting at 18.7%, which is a great number. Return on equity looks really good, and the most important number, return on invested capital, is sitting at roughly 16%, which is, again, a great number. It is slightly higher than the 5-year average, which is very nice. Current ratio is at 2.67, which is a bit on the high side, but nothing really that worries me a lot here. Right now Meta has almost 38 billion in debt, and I prefer companies that can pay down at least a big chunk of their total debt with the total cash. Meta has 65 billion in total cash, so they can pay down all their debt and still have money left. To me, this is really impressive. But it is still very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and all other things. And here we see that free cash flow went up in the long run. To me, this looks really good, besides 2022 of course. Shares outstanding are decreasing in the past couple of years. When shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at 0.1%, which is a really low number, but it is just their first dividend. Annual payout is at $0.5 right now, but this is the 12 trailing months, so I expect the annual payout to be $2. There are also no growth numbers since they just started paying dividends. There is not much to say about the current dividends besides the fact that a lot of people were really excited about Meta starting to pay a dividend. And overall these dividends look really promising to me, but how about the historical returns? I decided to compare Meta stock with the overall market, in this case the S&P 500. On the 5-year chart we see that Meta beats the S&P 500 with twice the return. And keep in mind this is including dividends. And Meta wasn't paying dividends in this chart. On the 1-year chart things look pretty good for Meta again, with 142% return while the S&P 500 is sitting at 28%. On the 6-month chart it is again Meta that is crushing the S&P 500 big time, with 65% return versus 20% return for the S&P 500. On the 1-month chart it is again Meta that is beating the S&P 500 with a decent difference. Bottom line, Meta was the winner in the long run and the short run. So could this be the perfect time to buy Meta stock? Well, let's check the 3 price targets that I created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth I'm filling in 10, 12 and 14%, based on historical performance, their own outlook, but also because of the analysis. For the profit margin I'm putting in 28, 30 and 32. For the free cash flow margin I'm putting in slightly higher numbers. For the PE ratio I'm putting in 20, 22.5 and 25. For the price to free cash flow I'm putting in the same numbers. My desired annual return is 12.5% since I can get an easy 10% average annual return with owning an ETF. Right now Meta stock is around $515. I hit analyze and we see a lot of red numbers. We have a low price target of $342 to $367. We have a mid price target of $463 to $494. And we have a high price target of $622 to $661. To me, the mid to high price target is the most justified here, telling me that this stock is exactly between those two ranges. And which price target do you think is the most justified? Let me know in the comments down below. My final conclusion on Meta is that it is a really interesting company. They have a moat when it comes to social media platforms. I expect margins to grow in the future and most fundamentals look pretty good. From a dividend point of view, things might get excited in the future, but for now they are really at the start. From a valuation point of view, things don't look that great, but they are not massively overvalued in my opinion. You pay a premium for the stock and with reason. I think the upcoming earnings are really important for Meta. Are they capable of sustaining growth numbers or is the company falling down again? For now I'm adding them to my watch list and keep analyzing them from time to time. And remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and we'll see you in my next video.